Good morning, everybody. Welcome to the Australian Organic Climate Change series. We are here today with a lovely group of professionals and we will be talking about organic livestock production. So just as we wait for the others to join us, this is the third emission in the AOL Climate Change series. We had the introduction with the reputable Mark Howden from the IPCC. The last one was the Vigneron session, which covered both agricultural production and the packaging aspects of greenhouse gas emissions and how this contributes to climate change. And today we have the livestock emission. So as we're waiting for people to get online, if you just want to introduce yourselves, you can post questions at any time. This is just a reminder that a recording of the presentation is going to be shared after this webinar. And ultimately, the reason we're here today is that sustainability is core to the organic industry. And for a long time, we have had our organic regulations and stuck with that. But in the changing sustainability sector, it's through understanding these emissions that we can then work towards mitigation and understanding climate change and the risks that these present to the organic industry that we can move towards a more resilient agricultural system. So just as a recap, whilst we're waiting, so extreme weather events, they're costing Australian farms on average $30,000 and rising. It's very easy to forget the extreme bushfires we had in 2019 and 2020 with these extreme flooding episodes that we've been having this year. But to recap, 24 million hectares burnt. It's the equivalent of the UK, so it's no small feat, and it was the largest in Australia's recorded history. And even with this, Australian land areas have warmed by 1.5 degrees, and this is above the global average of 1 degree for the same period. And so what does this mean for organic livestock production? To give you a recap of Mark Howden's slides, with current emissions trajectories, we're looking at a 4-degree increase. Which is a huge amount for an animal such as a cow that is suited to -10 to 10 degrees as its optimum temperature. If we're looking at this at a global scale, you can see that Australia is going to be highly impacted by that degree or temperature change, with variable changes within rainfall predicted, but definitely not positive. So without further ado, what can we do about this? And I'd like to introduce our first speaker, Dr. Stephen Wiedemann. He's the principal scientist and owner of Integrity Ag and Environment and an expert in his field. He's done a PhD in livestock emissions, extensive practical experience, and is also a sheep and cattle operator in northern New South Wales. So thank you very much for joining us here. He will be giving us the livestock emissions breakdown and help you better understand how you can improve your system. In addition to that, we have Nathan Moore. He's the Sustainability Manager for Hewitt Cattle. For those of you not familiar, Hewitt Cattle manage over 2 million hectares of certified organic land. This is spread over 3 states and also are part of the Arcadian supply chain. So his role and responsibility is to develop pathways and platforms towards good stewardship and improved environmental management. So he has an extensive background in the carbon industry, so we definitely welcome any questions that you may have about that at any point to Nathan. And last but not least, we've got Julia. She is the Meat and Livestock CN30 Project Manager, passionate about sustainable agriculture. I think that the MLA CN30 program was a groundbreaking development. Even since 2005, greenhouse gas emissions from livestock have fallen 57%. And I don't think there are many industries that can claim that. to give you some perspective, agricultural emissions only represent 17% of Australian emissions. And there's a lot of pressure on the agricultural industry to further decrease that. And without further ado, I'd like to introduce Julia to tell us a little bit more about the CN30 program.
Sure, thanks for that introduction, Josefine, and nice to be on the call today with some producers from around Australia. So I'll just quickly set the scene for what is the CN30 target for those who may be not so familiar. So MLA committed to support the Red Meat Advisory Council's commitment to achieve net zero emissions for the red meat industry by 2030. And the way we've gone about doing this is investing in R&D. It's what we do best as an RDC, investing in world-class innovation, novel technologies, and then of course the critical adoption piece so that these tools can get out to the folks who use them and make sure that they're practicable in the field. Next slide, perhaps, Josephine. Great, and we're going to do this without impacting productivity. So overall, we're looking at being more efficient with our carbon, and that's a theme that I'll probably come back to when we hit the panel discussion later on. So the main focus, I guess, of our investment is emissions reduction or emissions avoidance technology. So how can we really knock back what we're putting out into the atmosphere in raising livestock? That's then going to shift this sort of moving goal stick, if you will, for how much carbon we need to sequester. We can reduce our emissions. That's going to make the task of what we need to sequester in our lands under management a little more achievable, and that's how we're going to get to this net zero position. And we are tracking very positively, as Josephine said. We hit the next slide. We'll see that we actually have a new figure announced last Thursday with the release of the Australian Sustainability Framework for Beef. They announced that we've actually achieved a great milestone of 59% reduction on our 2005 baseline. So this is really, really promising. We should feel very optimistic about the continuous improvement of the red meat industry to get to this point. But now we're looking at sort of these remaining emissions, and that's where the R&D investment that MLA is focused on is really going to come into play to help us get those next goals on the way to climate and carbon neutrality. And so lastly, I'll just sort of mention this is an industry level goal. Not all producers in Australia will need to be carbon neutral or certified carbon neutral to get there, but we're certainly going to need a lot of buy-in, and we're going to need to be marching towards a similar goal of being more carbon efficient. There's going to be recognition for producers who are making practice changes to be better stewards of carbon, to be lower carbon operators. We're already seen out of the US recently a certification program to recognise low carbon. So it's not a zero-sum game of carbon neutral or everyone else. We're seeing recognition in the market for folks who can make some significant steps towards reducing their emissions from an average baseline. So that's great. Last slide, I think, Josephine.
Yeah, I think that,
gas. There we go. No.
We'll get back to the MLA program after Stephen's presentation, but just to set the scene, the reason that I guess agriculture has such a large pressure to reduce emissions is because we're custodians of such a large percentage of the Australian landscape. And you've seen a huge decrease in the soil organic carbon, mostly through unsustainable practices and other weather events. So there are studies that suggest that organic farming systems emit less greenhouse gases. These have been conducted by the Rodale Institute in the United States, but there isn't that much research in Australia, specifically with organic livestock production and the best practice systems of what that actually means for emissions. And it also doesn't include methane as such, which is a huge part of the livestock sector, as Stephen will cover. But ultimately we want to know, how does the organic livestock industry compare to this? we are a smaller industry compared to the huge value of the current organic or the conventional livestock industry as such. But meat production is a huge percentage of Australian organic exports. Most of this is destined for the USA, and increasingly we're seeing that the largest international markets, regardless of if they're organic or not, they're having an increasing focus on sustainability. So a lot of the content that might be presented here will be useful for market access in future, not just organic certification. So in terms of, how does the organic industry measure up? Without further ado, I'd like to invite Dr. Stephen Wiedemann to share his screen, and he will go through the emissions breakdown with us. And Stephen will just give you a moment there. But yeah, thank you very much for joining us here today. I don't see any questions yet, but like I said during the presentation, any questions, please type them into the box and we'll get to them as soon as he's finished.
Excellent, thanks for the introduction, appreciate that. Yeah, we've got the next little while to talk about the role of carbon in the organic sector. And I'm going to try to cover off on multiple sectors. I know there's representatives from poultry through livestock, grazing livestock today, so I'm going to cover off on both and unpack that for you. So just a quick word on who we are. Integrity Ag and Environment, we're based in Toowoomba in Queensland. We're specialists in agri-environmental consulting, so that covers a lot of work in carbon baselining, emission reduction, ERF projects these days, but more broadly around sustainability assessment, LCA, environmental regulation, and across all major ag industries. By background as well, there are a handful of cattle on our property in northern New South Wales. So that's around Inverell is where I grew up, and we still have some sheep and cattle country there as well. So why talk carbon? There's a whole range of reasons. Unless you've been living under a rock, you've probably heard most of them and picked up that this is a pretty hot button issue. But you can boil it down to a few things driving this area. First is federal and state government targets, and federally that's been, I guess you could say, in the last couple of years, late to the table really. But with the change in government, we're going to see that having a really big influence on this area. Next is profitability and income diversification. So you can make money out of carbon. You can also engage the market around carbon certification. There's certainly suppliers on the line who've businesses that are well versed in that. There's an intersect there with productivity and market access, and even access to finance now, with more and more banks having sustainable finance programs. And then long-term resilience and competitiveness with retailers increasingly considering the emission profile of their products, communicating to consumers about that, and expectation that impacts are reduced over time. So you see that Woolworths being, I guess, the most proactive in that space, setting a target for what's called the Scope 3 greenhouse gas emissions of 19%. Now, I'll talk about what these scopes mean in due course, but effectively that is all the food that they buy. So it's a little message there back to agriculture, regardless of what sector you're in, around an expectation that impacts are going to decline. Now, there's some businesses and some on the line today that have been proactive in this space, and MLA, of course, and as Julia has spoken to, have been proactive, and the red meat industry in general, in targeting, setting really an ambitious target around carbon neutrality by 2030. Yalamundi is a carbon neutral egg brand that we've been privileged to work with establishing that, and they have an organic line there as well. And of course, Arcadian, I think, will be well known to many on the call, and Nathan's going to speak to that as well, and their experience and journey around carbon neutrality and low carbon. Now, more broadly, the Farmers Federation have a statement on this around supporting an economy-wide aspiration to net carbon zero. And so that really sets the scene for the drivers in this. And you can keep looking. I could provide a dozen slides of different businesses and their communications around low carbon or carbon neutral moving into the future in the food supply chain. So this is what we would call a mega trend in both society, but also definitely in the agricultural sector. So we've tried to boil this down into something that you can get your head around, I guess, when it comes to low carbon or carbon neutral. And these are the steps I'm going to work through in the next 45 minutes while we have time. First is understanding emissions. The second is baselining and benchmarking those emissions and potentially setting targets for you as a business. It's hard to make progress if you don't measure and you don't manage. Next is then reducing emissions, followed by storing carbon, and that could be generating carbon offset credits, and then monitoring, reporting, potentially taking it to market as well. So what do we know about understanding emissions? I'm going to start with some broader context. I know there's participants from across multiple sectors on the call today. There is a difference between different meat proteins, and I've got the range there from chicken through to grass-fed. No, these are not organic numbers, but we don't expect the trend to be radically different in organics either. That trend is largely driven, and the high emissions for lamb and beef, by enteric methane that ruminant animals produce, and I'm going to speak to that in a moment. But of course, it's not the only lens through which to look at this issue. Greenhouse gas isn't absolutely everything. So I want to just give a little bit broader context to this, because every industry has its advantages and perhaps maybe has its weaknesses as well. And the contrasting story here is when we look at each of those production systems and how much human edible protein they rely on to produce each kilogram of retail meat. So as you can imagine, chicken and pork heavily reliant on human edible protein from grain, whereas lamb and beef are much less reliant on that, and particularly, say, Queensland organic beef, almost no reliance on human edible inputs. So producing a high quality food product and contributing positively to human food supply across the whole world. So it's way too simplistic when people are arguing, let's replace one industry with another. That's not going to work. What every industry needs to do is the best to reduce impacts in their own business and in their own supply chain. So I'm going to talk a good deal about emissions, but I want to start with a broad sweep of this and talk about carbon cycles. That's fundamental. And of course, our whole agricultural systems are built on carbon cycles, and every day of the year, right out on your properties, there is huge amounts of carbon cycling. It's been taken up by grass and by trees. It's being released again by animals and by breakdown processes in soils. That is happening every day, and our whole system is built on that. So really, we are carbon managers. When we talk about the impact on global warming, what we're particularly interested in is the small amount of carbon that's being contributed additionally to the atmosphere. So while we know there's this huge cycle going on and massive tonnages going in and out of the system, we're particularly interested in the small amount that is being additionally contributed to the atmosphere. I'm going to try and help unpack that here. And while I do so, I want to touch on the role of livestock. So livestock graze grass, and one day that grass was taken up from the atmosphere, perhaps 3, 4, 5 days, or maybe 6 months later, it's consumed by an animal And most of that carbon is re-released as carbon dioxide. It can be taken back up again by the grass, and it's part of a natural cycle. The challenge when it comes to livestock and the contribution to global warming is that a very small amount of that carbon, around about 6.5% of gross energy consumed, is converted into a different type of form, not carbon dioxide, but methane, CH4. Now that is contributed to the atmosphere, and it has a much greater warming potential than carbon dioxide. Now it also breaks back down again over about a 12-year horizon. While it's in the atmosphere, it generates a high degree of warming, but it does break down. So long-term cycles of methane is another part of the discussion. In fact, it's a big area of complexity and probably to some extent confusion as well. And I'll come back to that in a moment. But I want to talk about the other aspects of the carbon cycle that are relevant to agriculture. Next is, I think, reasonably straightforward to all of us. We recognise if you dig up fossil fuels out of the ground, you burn that in a power station or you run a diesel vehicle, you're contributing new carbon to the atmosphere that was stored basically permanently underground in fossil fuel or oil or gas. So that contributes to climate change. Then we have sources of carbon that are influenced every day by our agricultural systems. And I'm going to start with soil. So there's carbon going into soil at all times. Plant residues are breaking down and being added to soil. But that soil is also respiring carbon all the time as well. The microbes and the healthy living material, biomass within soil, they eat that residue and they respire carbon dioxide just like you and I do today. So there's a cycle going on, and often in soil, that cycle is in balance. So there's no actual change in soil carbon. There's carbon going in and carbon going out. There's also a situation in which you could have carbon going in, but more carbon going back out of soil, in which case it would be reducing over time. And those that carbon going out of the soil, well, that's contributing to global warming. It's adding more carbon dioxide into the atmosphere. And then, of course, there's the reverse, where there's more carbon being going into soil than there is being released, and that's reducing levels of carbon dioxide in the atmosphere. So it's a positive thing. There's a tremendous amount being talked about this at the moment. Now, if you see the green line as the surface, if you like, of Earth, the other aspect of this is trees, and trees also can be in balance, where you have a stable forest, a stable tree that's reached maturity even at an individual level, and it's taking up carbon all the time, but it's actually also releasing carbon. And if it's not growing and there's no more trees, then generally speaking, that will be in balance as well. Now we have situations where we can also be losing carbon from vegetation, if we're chopping down trees and that's degrading and burning, and situations where we're gaining, where we're having more regeneration. So obviously things like the human-induced regeneration method for generating carbon credits is all about regenerating and allowing more trees to grow back in the landscape, and that delivers a carbon gain. So simple stuff, but let's start with the basics and build up from there. So when we look at carbon accounting, we have to recognise a handful of things. Firstly, we have different gases that we're interested in. Carbon dioxide, we're very interested in for all the reasons I've mentioned. We also have nitrous oxide, and there's a small amount of this released from manure and a small amount from fertiliser use or manure application. And we have methane. Now, each of those has a different warming potential. Carbon dioxide is one, of course, and everything's measured against it. Methane is understood to have 28 times the warming potential of carbon dioxide. So a smaller amount goes further. And nitrous oxide is 265 times. So a small amount of that goes a very long way. If we look at the global carbon account, most of it is dominated by fossil fuel and carbon dioxide. So that's what everyone talks about, decarbonising the energy grid. That's important for sure. But if we look at beef and sheep now, it's a massive contrast. Most of the emission profile is driven by methane. So what affects us is really quite significantly different to what affects the rest of the economy. If you're a grain farmer, then the graph doesn't look so dramatically different. There's more nitrous oxide, but there is a lot of your emissions are driven by carbon dioxide from diesel, from certainly in the sort of conventional farming, from fertilizer, chemical fertilizer, which is very energy intensive as well. But diesel is obviously a major driver there. So let's dig a little bit deeper into this for beef production systems. These emissions, we've talked a fair bit about methane, and if we put numbers on it, we end up with about 80 to 95% of the emissions coming from the livestock themselves. That's the methane and nitrous oxide from a little bit of nitrous from manure. And that leaves 5 to 20%. Now, for extensive Queensland producers, likely to be the case for many organic producers, that's going to be closer to 5 than 20. 20 is more your intensive end of production with perhaps a feedlot or intensive production systems in the south. There's a bit of an open question. How much carbon might we be hopefully gaining in either planted trees or natural regeneration or soil carbon under a productive pasture? And the answer to that is we know much less about it. It could be 0, it could be 100% in some cases. Or perhaps even beyond. So because methane is so significant, let's pause and talk about a little bit about what it is and why it's generated. Firstly, it's a byproduct of ruminant digestion. It has a high energy potential, 55 megajoules per kilo. It's the same stuff as natural gas. So there's a huge amount of energy lost actually from the animal in methane. So around about 6.5% of the gross energy that an animal consumes, that goes to about 10 to 17% of the metabolizable energy. And when you consider that most of the energy consumed by a beef cattle herd is for maintenance, just to keep animals alive, if you were able to boost 10 to 17% of the metabolizable energy, you could easily double productivity, double the amount of energy available for growth. In Queensland conditions. So it's very significant from a productivity point of view. And all the initial research, which was done right back in the 60s, didn't have anything much to do with global warming. It was all about improving productivity. So there is genuine potential for a win-win if you can reduce methane. Now, I said it's been researched since the 60s, and there's been a lot of investment, and through the 2000s, really 60 or 70 million dollars of research just in Australia alone, and globally far more than that. And really, one of the conclusions is it's quite difficult to reduce. The good thing though is that there are new technologies and at least a couple of leading feed supplements and a couple of leading legumes that do reduce methane, and in some cases considerably. Now, I've talked a great deal about grazing livestock, so let me pivot for a moment and talk about poultry. I know we have some poultry producers on the line. So where do the emissions arise in poultry? I'm going to start with eggs. And what we have, a whole lot of different processes going into egg production, of course. Not so much from hatcheries, just less than 1%. Pullet rearing for a layer system with 3 to 5%. 7 to 26% coming from the primary production phase, 5 to 7 from grading, and that leaves the majority coming from feed production, 40 to 60%. And if we have cultivation in that system, and particularly is a challenge or a problem with imported soybean meal, as an example, we can have quite a big contribution coming from soil carbon loss there, contributing into the supply chain. So these are data that we've been collecting. We first studied eggs in Australia a decade ago, and we just submitted for publication a major Australian study on eggs. And there is also Yellow Monday, I mentioned before. They have a carbon neutral brand, and you can find out about their emission profile by looking for their product disclosure statement, which you can find online. And the sequestration story is, I guess, less understood. That's fair to say. We would like to think we get some carbon stored in soil from using that manure. And of course, we have the opportunity to plant trees on farms as well. Now for crops, for those who have a cropping component, and this is, I guess, more focused on conventional cropping, but I'll try and tease out the differences as well. We have all these different centres where impacts arise, and fertilisers and chemicals are significant for conventional cropping, both from an energy point of view and a nitrous oxide point of view. Now in organic systems where you might be using compost or manure, actually the compost and manure also have quite a considerable emission profile. So composting is it's great, it's wonderful, but if you generate compost out of animal manure, you generate quite a lot of nitrous oxide emissions. So it's not for free. You don't start with nothing there either, and you generate emissions when you apply it to land and transporting it and so on. So it's not as simple as saying, well, because we're organic, we don't have any emissions. We may have different emissions, and one you would need to look at is that manure and compost role. Fuel and field, and that, if anything, might be a little bit larger in organics because generally higher reliance on cropping, on tillage operations and so on. Lime, if it's required, can be quite considerable, up to 20%. And then the last one is tillage, and I'm going to speak more on this in soil carbon, but I guess the one thing just to call out is without doubt, tillage is a negative for soil carbon, so it generates carbon loss on the balance. There's some situations where that's more significant. Some soil types and some environments are much more resilient, but the experience of the research is pretty clear in Australia that tillage has contributed to lower carbon levels. So when it comes to how much that might contribute to grain, could be 0, could be 300%, so it can completely dominate the profile for grain. And of course, the same question, there may be other areas on farm that are contributing positively, and you may be able to rotate crops and pastures and generate soil carbon improvements there as well. Using manure and fertiliser, manure and compost may be an option to build or maintain soil carbon, of course, as well. So I mentioned up front, when we're talking about understanding emissions, we do use some different language in carbon, and one of them is the language of emission scopes. And I want to explain really quickly, because you hear about this, and the more sophisticated this field becomes, the more specific and clear the communication. So most targets now, business targets, use this language to help explain exactly what they mean. So we'll start with scope 1 emissions. What they represent is the emissions that occur within the operational control of your business. For a livestock business, that may be enteric methane we've been talking about, and machinery fuel use in particular, that are occurring directly in the control of your business. Scope 2 are really quite specific, and they relate to grid supplied electricity. You use the electricity on site, but the emissions occur down the road at the power station. What Scope 3 emissions relate to is anything that you buy. Now that could be fertiliser, like we were saying, manure or compost. It could be fuel, hay, grain, other livestock from different businesses. All of those are classified as upstream Scope 3 emissions. And we have downstream Scope 3 emissions. Who you sell that product to also have emissions from transport, processing, etc. And you really need to include everything that we see here to properly understand the impacts of a product. And if you want to make a comparison from one production system to another, it's impossible to do really without including Scope 1, 2, and 3 emission sources. And that's because business structure has such a big impact. A trading cattle business will naturally have lower Scope 1 emissions than a breeding cattle business. The first thing we can take away from that is they're not comparable. You can't benchmark the two. But if we include the Scope 3 emissions, the emissions to breed cattle that are then background in an enterprise, they become much more similar and much more comparable in like terms. Now, this also is influenced by where you are in the supply chain. So if you're in primary production, most of your emissions are going to be contained in scope 1, and you'll have a proportion of scope 3 contributing. If you're in processing and distribution, that is going to look different. All of a sudden, primary production is part of your scope 3 emission profile. And if you're in retail, then processing, distribution, and primary production all become part of your scope 3. So that's why if a retailer communicates about scope 3 emissions, they're actually talking about all of the agricultural and primary production and processing supply chain. And they're sending a signal around an expectation that emissions are going to reduce over time. Their own component, their scope 1 and 2 emissions, are really a relatively small part of the overall supply chain of delivering food. So if we want to talk baselines and give something to compare with if we're going to get onto benchmarking operations, what do we know about emissions? Well, we do this work for the Beef Sustainability Framework and report on a 5-yearly time step the emission intensity of Australian beef ready for processing. And we're about due to do the next time step. There's a bit of a lag on the data availability. So we have up until 2015 at present. And we see a downward trend, about 19% emission reduction across the beef industry over 35 years. So that's a good outcome, largely driven by improved productivity. So in that context, I'll get into in a moment what I mean by productivity. Generally speaking, we see this trend towards lower emissions towards southern states. And again, that's largely driven by the productivity of those systems. And the range, we're talking 16 down to sort of 9.5. These are carbon footprint for cattle that are ready for meat processing, and they're inclusive of all emission sources, scope 1, 2, and 3. That's the only comparable result you can get. What it also means is that the results are tied to biology. You basically can't get a result under about 9.5. And you can get results quite high, but 20 is practically sort of the range that you're likely to get. So 9.5 to 20. If you've got a result that outside that range, you've really got to be questioning whether there isn't something else going on that's driving the outcome. Talking about eggs now, the numbers are quite different. 2 kilograms of CO2 equivalent per kilogram of eggs is the baseline, and these, like I said, results are pre-publication. Generally, we do see slightly higher emissions from free range, and that's, again, there is a productivity effect there too. Slightly more feed consumption in free range, slightly higher mortality, for example, does create a drag on performance, and that is influenced as well, or influences the carbon footprint as well. So you see the same trends coming through, performance, influence. And meat chickens, we have a similar outcome there, and these results are currently submitted for publication as well. So there are baselines. Now, if we're talking about how do we improve, we've tried to boil this down into something that you can grasp hold of, and we call it the 4 levers of moving towards low emissions and carbon neutrality. The first is to start by optimising your herd and flock performance. It's the thing you tend to know about. It generally helps productivity, it helps productivity. It usually helps profitability as well. So it's the natural starting point. From there, we have options to regenerate trees or potentially plant trees. Number 3 is we can build soil carbon levels. And number 4 is that there are some technologies that can assist feed, supplements, legumes, solar, electric vehicles into the future. I'm going to quickly unpack these in the time that we have. So optimising productivity, if we're talking about a grazing enterprise, generally we look at factors that influence the overall structure of the herd. So we want fewer unproductive animals. That means higher weaning rates, fewer cows wandering around, not producing a calf, but producing a whole lot of methane. That's the first thing. Next thing is improving growth rates for young cattle. So if we can turn off an animal at 2 years old that previously took 3 years old, at 3 years old that previously took 4 years old at the same weight, then it's 1 year less on Earth to generate methane to produce the same amount of meat. So there's a productivity aspect to that. And so they're often the questions that we start by asking, and I'd pose to you, could you run a more productive herd? Could you even run fewer cattle that are more productive in terms of the use and availability of pasture that you have? If you're talking about poultry, it might be more related to feed conversion ratio. Most of the impacts come from feed, so if we use less feed, then we will have a lower carbon footprint almost always. And things like mortality as well are a factor. Now that you can generate carbon credits these days in a beef herd by leveraging these things, and that comes under this ERF method called beef cattle herd management, generally is more suited to bigger herds, largely because the compliance is quite heavy and you need a lot of data to really be able to prove that those improvements have taken place. But it's certainly an option and something that's still building momentum in the northern industry. Moving on to the next one, trees. There's trees and there's trees when it comes to carbon. The simple rule of thumb I use is this: there needs to be either bigger trees or more trees each year to be storing carbon. If that's not the case, they're great and they might be contributing to biodiversity, natural capital, and a lot of other things, but they probably won't contribute much to reducing your carbon balance for your property unless there's more of them or they're bigger. Other simple rules of thumb, if you think of wood just in terms of how much material you can see, good thing about trees is you can see them. You can't see emissions from livestock, and it's pretty hard to see, let alone measure carbon change in soil. Trees are the one thing we can see. So the way I often think about it is how much timber can I see? How much biomass can I see in front of me in a given area? A tonne of firewood, to give you an idea, is around about equivalent to 2 tonnes of CO2 equivalent emissions. So if you can see a tonne of material, that's a measure that you can use. And you need to be increasing more. So generally under that sort of human-induced regeneration type approach, you're looking at from less than a tonne to around about that 7 tonnes of carbon dioxide equivalent per hectare. So that's often only 1 to 2 tonnes of actual biomass that you can see being built on each hectare each year. But you do need to be increasing the amount of trees. That's fairly straightforward. The gross returns can be quite significant on those, depending on the carbon price and depending on the yield that you get. And the last thing to say is that the way that trees operate in the landscape can favour carbon, or it can favour biodiversity and carbon. And there's going to be more and more discussion, I think, about this, because we can have higher carbon stock environments, very heavily timbered areas, plantations even, store a lot of carbon, but actually don't contribute a lot to biodiversity. So there's a bit of a balancing act and even a bit of a trade-off there, but we can do both. Usually we sacrifice a little bit on both sides. We sacrifice a little bit of carbon yield to achieve biodiversity outcomes. And to give you an idea of what this looks like, and this is not a Queensland example, it's on the tablelands in New South Wales, but the point is this: you do need to do something to have trees shift the dial. There's not many farms we walk onto that are carbon neutral because of regeneration. There is a few, and usually you're aware of it. You've got regrowth occurring on those properties. If it's from tree planting, this property, and you can see the neighbouring areas compared to this one, have got quite significant plantations on that farm, and that was sort of around about 50% of the equivalent of the livestock emissions over a 40-year period. So the soils, and this is a real whirlwind tour, I acknowledge, but I'm going to try and cover all the relevant material and give you an idea of the big picture. Soils are a huge opportunity if you can unlock them. 0.1% change in carbon to 30 centimetres, around about 4 tonnes of carbon. So over even a small area, that can be a massive amount of emissions offset. The difficulty is measuring that, and when such a small change is going on, and also literally achieving it is quite challenging in an Australian environment. The factors that drive that, the negative ones, overgrazing, that'll cause the loss of soil carbon, low ground cover, loss of soil carbon, poor soil nutrient levels, loss. But then on the positive side, irrigation, perennial pastures, optimum nutrient management, rotational grazing, high ground cover, introducing legumes, compost and manure application. So there's plenty of things we can do. The brains trust and most of the research, if you really dig into it, and New South Wales DPI are currently in the final stages of publishing a study on grazing and carbon interactions, and the results just aren't clear. Even though we might like them to be, there is no unequivocal rules in this area. There's variation from state to state and farm to farm and region to region, which makes it all really quite challenging. There's a few things we know hand on heart that do increase soil carbon. One would be where you convert cropland to pasture. That's really the most reliable way in which you can hand on heart say you're pretty well guaranteed to build soil carbon there. Outside that, you may or you may not, and you're going to be influenced by seasons, and the change is going to occur over a long period of time before you see it. So what drives this? Well, firstly, I think of it like a bucket with a tap at the top and a tap at the bottom. Input tap is really plant material, perhaps some additional material from a manure or a compost from off-site. So anything that influences plant material influences carbon, rainfall, soil fertility, etc. Perennials all contribute more carbon into the bucket. But the bucket always has the on tap turned on as well. There are always losses going on in soil. Microbial action, which we want, we think it's good to have a healthy living soil, but they are consuming all the carbon we put in. Sometimes all the carbon we put in is being consumed and there's no change in soil carbon. And there's a whole lot of factors that include that, but some that we call out, and I did before, factors like tillage, fallowing, erosion, those contributing negatively to carbon loss. And so the balance in the bucket, how much is in the bucket, is the balance of the inputs versus the outputs. Now, just to keep on this point about the long-term trends in soil carbon in Australia, generally have been down, like from clearing, introduction of cultivation. Generally speaking, there's a long rundown period in the carbon levels, but it's not for the purpose of being depressing. If we introduce a change, like we convert that to a permanent pasture, we can definitely rebuild that. And what we have here is the yellow lines. That's what we call particulate organic matter. It's just broken down. It's almost, you can still see that it was plant material recently. It responds really fast, but it's also pretty easy to lose. That humus fraction, which I'm sure there's many who are really focused on that in your enterprises, that's the good stuff. It's slower to build. It's more stable and it contributes to your nutrient cycling and your real structural integrity of your soil. So that's what we want to build. But you see there, even over that time period of 70 years, humus levels haven't necessarily recovered back to the point where they were. So there's a real challenge here because a lot of country in Australia has run down carbon historically, and now is the challenge to rebuild it. If we can, we may get financial dividends, and we certainly get a benefit to withdrawing carbon out of the atmosphere. So how do we work that out on a particular site? Well, there are factors that influence the potential, and we start talking about the potential soil organic carbon, influenced by soil type predominantly. Next thing is how much you can actually attain, and that's influenced by the environment, particularly rainfall. And lastly, there's the amount that you actually have, and that's what's influenced by management. And generally, when we're building soil carbon, we're trying to reverse that process, and we're trying to optimize management and push from actual levels up towards attainable levels. So talking about Queensland, most of us are based here. We have naturally lower soil carbon levels than Southern Australia because of that rainfall and variability issue. And so there are opportunities, and certainly research under Leukina, for example, again has shown up to a 0.3 or almost 0.3% improvement in carbon over 31 years. So it gives you an idea of how long. I do have people, and they knock on our door and they'll say, well, we're targeting a 1% improvement in soil carbon per year. Now, to achieve that, you need to put around about a B double of carbon into the soil because you lose so much. It's very, very, very hard, almost impossible to demonstrate that high level. Now, some people disagree with me, even on the phone, on the call today, but the research generally points to much lower rates of carbon build-up than that. And like I said, converting cropland to pasture, research on that at 0.65 tonnes of carbon per year over a short period of time. It's 4 years. The last lever is around technology, and there's a few things here. You would hear a lot about feed additives offering promise for reducing methane levels. And the two leading ones there are Asparagopsis and Bovar. So small amounts of those products can really knock down methane levels massively. In a feedlot environment, perfect conditions, that knockdown can exceed 90%. In grazing, we expect it to be considerably lower, might be more in the order of 30 to 50%. And really the research is only in its infancy in that area. Leukina I called out too. Cattle grazing leukina knockdown in methane can be 20-odd%. And you can get two other benefits as well. One is higher productivity, so you turn cattle off quicker. And the third, the trifecta, is you can build soil carbon from introducing that legume as well. So adding up, there's a lot of different things we can do around methane, but to give you some relativity, management practices, the farmers that we've tracked for a long period of time, 2 to 4% rate of change where they're really proactively trying to improve management. Breeding is in its infancy as well, deliberately breeding to lower methane. And so we tend to see, sub 10%, but the best option there, at least in my book, is going to be breeding for residual feed intake, reducing, improving feed conversion in cattle. And lastly is around rumen manipulation. So generally less than 30% for what we know of the feed supplements and options available to us. But there's these couple of standouts which might be more in that 40 to 90%. Top end of that range, just to be clear, is more like feedlot environment. Bottom end of that range is more where grazing is likely to sit. And legumes there called out before, 5 to 20-odd%. That's that sort of order. So I'm going to keep moving because I'm probably running out of time, but I wanted to throw a quick example up. This is one farm we did find, and we had permission to share the results from Mount Brisbane, where they were naturally carbon neutral. The emissions, reasonable scale of beef enterprise, but also a large amount of regeneration going on in natural forest land, exceeding, in fact, the emissions from cattle. So we do see examples in Queensland, particularly where there's significant native regeneration occurring, and we've got carbon neutral enterprises. And examples from Southern Australia where largely they've been driven by changes in management, tree planting, perennial pastures, reduced stocking rates in some cases, over a period of time generating carbon neutrality. And those blue lines being total carbon change on those properties, and the modelling going right back to clearing, and the change being instituted with better grazing management and tree planting, contributing. In green, you see the carbon stocks in trees really climbing, and in red, you see the carbon stocks in soil climbing over a period of time and contributing positively to the carbon balance. Now, generally those changes occur for a period of time, and so when you are in the cycle really influences what changes are going to be occurring in carbon stocks on your farm. So looking over the fence, just here's a few thoughts to think about. I'm no expert in organic systems, but these are some of the things that come to my mind that are relevant. First is that you're obviously very familiar with certified systems. You have to be, and you have audits. Carbon also, there are certified systems, and we do audited carbon footprints, but it's a quantified system. So it's driven by numbers, and it requires herd numbers, flock numbers, inputs, purchases, diesel, things that you wouldn't be so familiar with, and you get audited against a result, a carbon footprint of 2 or 10 or 15. So it is a little bit of a change if you go into a full-blown audited carbon system. And because carbon's measured, not so much about management, but it's about measuring change. So soil carbon's the same. You need to be able to demonstrate that you've measured a change in soil carbon between 2 points in time to prove that you've achieved it. And that measurement piece is actually probably the biggest limitation, especially in grazing at the moment, is just the small rate of change and the expense it is to be able to measure that. Third point is that ploughing is really a real drag on soil carbon, and we've seen in pasture crop rotation systems where a couple of years of cultivation is destroying 10 years at least of carbon build up from a pasture phase. So that's a real challenge, and I think for the organic sector where there's grain or something like that, there's a challenge there. And lastly, feed supplements. They're going to be essential for the future, particularly in ruminants. And so the question is, how are you going to grapple with that? Some of those are synthetic, like Bovar. Others, you could argue, naturally derived, like Asparagopsis. But that's just going to be part of the landscape, I think, to navigate as they become more widely available and widely used. So I'll be that. I hope I haven't gone over time, and I'll stop my sharing and hand it back over.
Thank you so much, Stephen. I think that you raised some excellent points for the organic industry in terms of things that we need to consider moving forward. I think that a lot of these issues aren't limited to the organic industry. When it comes to feed additives, there's a lot of large-scale production systems there where that will also present an issue in terms of supplementing with this. Of course, there are ways around this, but we look forward to working with other industry representatives in tackling this. I think, when we look at emissions, there might be arguably that sustainability tunnel syndrome, as emissions are only one aspect. And have you also been doing a lot of work in terms of the natural capital or the biodiversity and carbon and combining that?
Yeah, look, I think that's a big area that's underway. There are two different fields that are, I think, just coming together at the moment, really, and part of that whole process is understanding there's some obvious synergies, both, particularly if you're thinking about trees or regeneration, there's an obvious synergy there, but there are going to be some trade-offs as well. Like I was saying, you can grow almost invariably, you can store more carbon if you focus a tree planting exercise or even a regeneration exercise towards that outcome than you would with the classic sort of biodiversity planning is multi-tiered, layered environment. You've got shrubs, etc., and you're really trying to restore that to its natural stable sort of woodland. So it's, I think, interesting. We're going to grapple with the pros and cons, and really I think the outcome needs to be that we benefit, that we measure both, that we assess both, that we value both, rather than getting dragged all into one. There's certainly a risk with carbon. You get dragged all into talking carbon only and forget that there are other benefits and other issues that are really significant too.
Yeah, there definitely are. So I'll just go back to the original presentation. You know, I think that Stephen's done a great job of breaking down the emissions for the two main industries. When we look at the Intergovernmental Panel for Climate Change predictions that are coming for Australia, emissions aren't the only thing that we need to be watching out for. I think that this week, it was very interesting to see that the first GM cattle that are more heat tolerant have been bred within the US. So we're not the only country that is preparing for what is to come with climate change. But in terms of, you know, organic production systems, Nathan, if you were still online, you know, what are the main risks associated with climate change that you are preparing Hewitt cattle for?
Yes, obviously there's quite a diverse range of risks that we need to take into account. I think in terms of our production systems, we have the advantage of having a variety of different landscapes where our production exists, and having that additional advantage of being able to manage where our supply is coming from across the landscape. We have a variety of breeding and backgrounding through to fattening operations, where we can adjust stocking numbers based on, I guess, seasonal conditions and where is the most appropriate areas to be grazing livestock at the time. But with that comes a lot of challenges as well. We have a large area to manage, and we're currently looking at potential to manage building drought resilience, looking at localised projects like landscape rehydration projects, understanding flows of water across our systems and how to reduce erosion and those sorts of natural effects to build drought resilience across our portfolio. And there's challenges in doing that because of the variety of landscapes where our production exists as well. So we're currently putting a lot of work into better understanding our production systems on ground.
Yeah, definitely. So, Stephen, you raised some excellent points in terms of, you know, soil organic matter, and I think that, you know, I definitely want to reiterate that soil is the basis of organic agriculture, and a lot of the emission mitigation also has a number of other benefits as such. I understand that it's very difficult to increase soil organic carbon in northern Australian dryland conditions, but you know, here are just some very interesting statistics that I think we as an industry need to concentrate on, especially you know, sometimes within the organic industry, feedlotting can be seen in a positive and negative sense, given that, you know, for emissions reduction and reducing the age of the livestock, it is very good for that. But ultimately, you know, when you have that correct grazing management practice with that good ground cover and the destocking at the right times, then it can have a lot of favourable effects with that. And that's also something that, you know, you've been working with Julia in terms of a lot of the justification for livestock producers changing their practices are to do with efficiency. Did you want to touch a little bit on that?
Yeah, no, look, I'll pick up on the soil point as well. We think it's likely we can get, in fact, massive amounts of soil carbon increase, even in, you know, grazing systems in Queensland. The hardest thing is going to be measuring it. So we might be talking, let's say, 50 kilograms. In fact, the MLA targets in CN30 for a 50 to 100 kilogram per hectare per year increase in soil carbon in grazing areas. That could be achievable, but it's almost unmeasurable. So our challenge is really a measurement one, and that's where, you know, I think it goes back to the research community to work on that. So it shouldn't be something we lose heart and so we can't do anything. Absolutely can. That good grazing management, spreading out stock, more water points, introducing a legume, which I think is all, you know, mission critical stuff in Queensland grazing. All can have a small and positive effect on soil carbon, and I think we really should do that. We just hope that in the next couple of years we can find measurement that allows us to pick up those small changes. And there is definitely some work going on. To question you actually asked me. Yeah, look, productivity is, I think, is a really good thing. It pulls in the same direction as you know, your business goals. And it's really about less unproductive animals and reducing the maintenance requirement in the herd. So the vast majority of manure is going in maintenance. Of energy is going in maintenance. So the more beef you can leverage out of a cow, the more beef you can get per finished animal over a period of time. That's really part of it. And there may be diversification of where you're grazing and moving stock around. It's been, you know, part of the Queensland management system for a long time is really working on where you're getting the best seasons and being able to shift cattle around and potentially, you know, trading cattle out if you don't own that additional country, to really make sure the animals you've got are as productive as possible. And, you know, at least there is that sort of dividend in that as well, that more calves on the ground is also more money in the bank.
Yeah, definitely. And Julia, I mean, this is something that MLA have been looking at very closely, and something that you've definitely been pushing with the campaign as well. Did you want to add anything?
I think Stephen sums it up fantastically. Basically, such a big portion of what MLA is there to do is to run that adoption piece and make sure that the producer community is aware of, one, where money's being spent, and two, you know, what the opportunities are. And that's the key one, is that this is not a zero-sum game. It's a continuous improvement towards being more carbon efficient, and that, you know, carbon CN30 strategies are not so unique from the kinds of decisions you might be making to improve farm performance. So, you know, one of the cases where we look at, Stephen spoke a lot about building that soil carbon sequestration in your soils and vegetation. One of the areas we're looking at closely is around supplements and additives and emerging supplements that could have a lower methane outcome in sheep and cattle. And so how do we sort of communicate the potential of this? It's always best to talk in dollars and cents and what that means for the farm's bottom line. So that's where this sort of slide that we're all looking at comes into play. Whilst the most progressive additives that we're looking at, that being the 3-knot synthetic varietal, and then the red asparagus, the natural seaweed varietal that's, you know, commercially branded as Future Feed, which sure most folks on the call would have heard of before. How can we look at the methane, the diversion of methane as a waste energy into, you know, live weight? What does that mean in terms of recaptured grazing days that we'd otherwise, if we lost that energy as methane, what would that mean in a dollars and cents term? And so this is how, I guess, we want to be thinking about any kind of sustainable change on farm, just for it to be very motivated by a business goal, and starting from that point.
Yeah, because I mean, ultimately, if it's not economically sustainable, it's not sustainable long term. And you know, there's a number of different projects that you guys are working towards at MLA as well.
Yeah, absolutely. So MLA has invested $120 million to date across emissions avoidance and carbon storage practices and technologies. So we're sort of at the early stage of that R&D journey. So I'd love to be sharing more, you know, definitive results with you, but we'll see them come to the forefront in the next 12 to 24 months. And we're really, really excited about that. So looking across the board at that supplements piece, looking at lower methane pastures, and then over in the carbon storage space, really looking at some of these practices that I'm sure a lot of people are already exploring, some grazing management tools like time-controlled grazing, topical applications, biochar, dung beetles, and again, back to that deep-rooted legume mix, but really trying to quantify the benefit there for farm performance. So it's not just anecdotal. We really want to have some rigor behind these practices. So folks know whether it's something they want to invest in or not. And I would encourage everyone on the call, if you are looking at making some modifications on farm, to just be capturing that data in a consistent way as best as possible, so you can see the change. And then I'm sure, you know, Steve and Nathan would be doing this and be, you know, preaching this to the choir. But if carbon farming is something that you're looking at doing down the track, it's going to aid that journey if you've been keeping the best data possible for as many consecutive seasons as possible.
Yes, definitely. So obviously, unfortunately, at this point in time, 3-NOP is not allowed under organic systems, Asparagopsis. It will be really interesting to see how that gets commercialised. You know, we've talked about the potential limitations in northern systems where the soil quality is poor and you've got phosphorus deficiency and so forth. And I know that has been an extremely successful campaign for MLA in terms of phosphorus, mineral licks and so forth. And that is definitely an option within the organic systems. I'd love for you to tell us more about some more of the results that you have had within that.
Sure. So it's not a CN30 portfolio strategy. Again, coming back to that point, what's good for farm performance is by and large, it's good for efficiency. It's good for that indirect carbon using more feed less. So the phosphorus example is a great one.
Sorry to interrupt. There's just a bit of background sort of feedback when you're speaking. I don't know if anything changed when you went off mute.
No, is it still continuing? If
Yes,
it is,
maybe
somebody else ask the question. I'll see if I can see the same time. Sorry, I don't know.
Sorry about that. You've got a lovely voice, but probably hearing it once is enough. Is enough for me, if that's all right.
I won't take that comment. I would 100% agree with you.
Well,
I'll come back to that.
Yeah.
There's a question for someone else.
No worries, we can come back to that. So Nathan, this is a photo of some of the Leukemia plantations that you have within Hewitt Cattle. You know, we've been talking about economic sustainability. Previously talked to you that, you know, if you could, you'd convert all your properties to this type of production system. But, you know, given your experience within the carbon sector, you know, what are you prioritising and how quickly do you see your properties converting to a more mixed legume-based system, given that is one of the best options for the organic sector at the moment?
Yeah, so it's not the easiest question to answer because there is a number of limitations on where you can sort of deploy these different outcomes. So obviously the production of or expansion of Leukemia cultivation has been conducted to a fairly large extent on the properties where that was suitable to do so. There's other properties where it just may not be feasible, or it may not be the right soil type to deploy the same outcomes, but there's definitely a lot of work going into looking at diversifying pasture species and multiple outcomes where that can be developed to achieve better production outcomes. But also with the associated outcomes for building soil carbon and looking at, I guess, the most strategic way to develop all of our portfolio to achieve those outcomes as well. We do have, I guess, the ability to look at different outcomes by region and production systems, and there will be limitations, as Stephen was discussing there before, about the outcomes you can expect through different soil types and interventions, where some properties may only be able to look at the potential increases in canopy cover and tree cover, where the soils just may not be suitable for looking at diversifying pasture species in Leukemia cultivation. But a lot of this work had been done in the past for those production outcomes and increasing soil outcomes in terms of health and productivity, but we're always looking to expand on that and improve those outcomes where we can and where it's feasible to do that as well.
Yeah, I think that's the goal of any business, arguably. And Julia, you're back with some headphones. Tell us more about phosphorus.
Hopefully back. Yeah, so to pick up on supplements,
read a great case study from an MLA supported program, Future Beef, really targeting, how do we improve nutrition in northern rangeland systems, and just it's taking that approach of it's not an official CN30 investment, but it's an amazing tool for efficiency. So the results from that case study showed that $1 invested in phosphorus supplementation in those sort of poorer, poorer pasture, poorer soils areas resulted in a $7.60 value add at the end of season. So fantastic example. On the natural red asparaginopsis side, focusing on sort of the organic aligned supplements that MLA is invested in, a tremendous potential and proven potential in trial to reduce methane. Just how do we make that translate commercially in the paddock, in the feedlot, and in particular, obviously, there's the added challenge in a grass or a grazing system in how do we deliver those additives to cattle and sheep. So simultaneously, MLA is investing in those delivery mechanisms and trialing and testing what methods achieve best results. So we're looking at, putting additives through reticulated water in the water trough. We're looking at lick blocks. We're looking at early life programming, which is showing some very interesting preliminary results that calves feeding on mum during treatment with this additive are having a transfer of benefit from mum to the calf. What we're now looking at is how long that benefit lasts. And lastly, the most the one I quite like to speak on is a vitamin jelly is how I like to describe it. So officially referred to as a biodegradable bolus that could be dosed into the sheep or the cattle early on in life during other husbandry processes, and then that vitamin, if you will, degrades over the life of the animal in the rumen, releasing that active ingredient, in this case, looking at the red asparaginopsis. So these are sort of the key challenges for the next 5 years to deliver a solution that works not just in the feedlot where we've got a controlled environment, but in the grass and grazing system where 97% of our livestock are raised.
Yeah, definitely. And Stephen, you've got clients that are organic, you've got clients that are conventional. If we're talking about, emissions efficiency aligned with profitability, if organic beef producers could make one change, what would you prioritise?
Yeah, look, if you've got the country to support it, things like Wikina and Magnificent in Queensland, pasture improvement, supporting that. So yeah, legumes they offer a trifecta. You get better animal performance. You can, with the right legume, you can get lower methane per head per day, and you can build soil carbon. So I think it really is a pretty remarkable trifecta, and the profitability is pretty good too. So that's from a practice change point of view, that's one, and you only asked for one, so I'll leave it with that. No, I won't. I'll give you a couple of bonus. The other is, in the future, you're really going to need to be thinking about how to quantify this, and it's driven by management data on livestock. So think about your management data systems and getting them, really to best practice that'll allow quantifying emissions, particularly from the livestock side. And lastly, it's going to be the role of revegetation, regeneration on farms. So I think that's another big piece for enterprises that may not be able to, the land base may not support a legume pasture. Then there may be a better way of balancing back in the role of trees and revegetation to balance the carbon goals with the enterprise.
Yeah, well, I mean, it seems like everything has to be quantified nowadays. There's been talk about a federal government livestock methane tax. Julia, does MLA have an update or a position on this? And in your experience, is a tax the best way to facilitate this positive change?
Sure, good question. And yes, I'm sure we've all sort of been watching that emerge over in New Zealand. it's not the only sort of the country that's looking to place tax on greenhouse gas emissions coming out of agriculture, of course. But as you know, MLA is an R&D body, we don't take a position in policy or in the political sphere. That's a role for the peak industry councils. MLA's role is chiefly to deliver research and development and adoption outcomes. So the reason we supported and took steps towards this CN30 target was to preempt and anticipate consumer, shareholder and market trends and potentially regulation around greenhouse gases. So we feel that, you know, direct action on farm is already showing that that it is the best method to get ahead of these trends. And ultimately, I think when we're delivering triple bottom line benefits and win-wins for the farm business, like Steve and Nathan both spoke of, that's the way to really drive that positive practice change.
Yeah, you know, this is a question to you and Stephen and Nathan. You know, should producers be keeping all their carbon credits to offset their own businesses, or should they be selling them? Because that is the questions that we get quite a lot here.
Yeah. I'll let Nathan answer first. Since
Nathan speak. Yeah.
Thank you. Yeah, I guess initially I think the horse may have bolted for some of those farmers that were first adopters in some of those carbon schemes, where they've already forward contracted very large volumes of their abatement. So it may have tied their hands to some extent for where they could actually be recognised as carbon neutral because they're selling, I guess, that offset to somebody else or selling that to a market where they're receiving a revenue stream for that. But generally, those projects will have a long lifetime where they can generate offsets for 25-year periods. So there is a back end outside of those contracted volumes where producers can make those decisions themselves about whether they want to head down the carbon neutral path or whether they just continue to receive the revenue from those offsets to better improve their production systems and achieve different outcomes. It probably just comes down to what outcomes those landholders or producers specifically want for their own purposes.
Yeah, definitely. And Julia, when you get that question from producers, what do you tell them?
Right. Well, first up, and I'm sure, you know, again, Steve and Nathan, this will be familiar to you, but the generating and going down an official carbon farming project path to generate credits is one opportunity, but there is again plenty of value to be generated in just adopting more carbon efficient practices and reaping that productivity benefit, whether it's stocking rate or in some other area of the farm. So there is value there as a standalone. But then if we are looking at projects that generate carbon credits, potentially they could be too valuable to sell off farm and off your own personal carbon account for your business's carbon claims, be that low carbon or carbon neutral. So what we would encourage is, you know, look at your business, look at where you want to go, and then make a decision. There is certainly revenue to be made, alternate farm revenue to be made from trading credits in the spot market. But looking down the track, could those credits, or could, you know, the credits less than, say, what you might need to cover your baseline for your own farm, maybe they're too valuable to sell off farm. Maybe they're needed for market access. We're already seeing in Europe a carbon border tariff placed on manufactured and mineral goods. It's not absurd to think that might extend down the track to agricultural goods, and so those credits might be really critical to maintaining a competitive entry strategy for those markets. You may want to participate in a low carbon or carbon neutral product line, as we've seen through NAPCO, Coles brand that's just released, and you may also just wish to keep them for your own business goals, ideological goals, to position yourself in the market as a low carbon operator. Doesn't always have to be a certified process. One of the most profiled businesses in
in Australia, or profiled farm businesses, would be the Jigsaw Farms, which came up in Stephen's presentation. That's not an officially certified claim, but it's backed up with rigorous data. They've done the work, and that's their brand in market. So there are many other financial opportunities to keep keeping or insetting your carbon credits, not just trading them.
Yeah, and the brand that you sell under Nathan, Arcadian, they were arguably one of the first carbon neutral meat options available on the market. You know, what was the motivator here, and how was this accomplished?
Yeah, for Arcadian, there's been a long history, I guess, in leading industry, particularly in producing organic supply into different markets, and Arcadian wanted to continue their role as an industry leader in a high claims business as well. So Arcadian were already very familiar with a number of different certification processes for organics and animal welfare outcomes. And it was seen as being the right path to go down commercially and ethically as well. And also a bit of foresight there in having access to different markets, even though the premiums may not exist yet for all of those markets where we have access to for our low carbon or carbon neutral products. It was seen very much as being the right path to go down as an organic producer. So there was a decision made at that point to take on that process, which was a significant investment for Arcadian as a company. We had to engage with a third party to conduct an audit across our business and to account for our supply chain's emissions, and to make that conscious decision to secure offsets to offset our supply chain as well. But that very much was, even though it wasn't an easy undertaking, it was very much the easy part of that process where we can conduct that accounting and secure offsets. But now we're very much looking at the upstream and downstream sides of the business where we can achieve those reductions right across the supply chain, insetting opportunities, generating Australian carbon credit units where possible, and just really advancing that platform for ourselves into the future as well.
Yeah, definitely. And Stephen, obviously you've been working a lot with the beef sustainability framework, and what advice do you give producers to become carbon neutral and reduce emissions, apart from directly contacting you and after this webinar, of course? Sorry, you're just on mute, Stephen.
Sorry, I caught that just in time. Yeah, look, there's increasingly resources available and training. We've done quite a lot of training in this area as well. So like the process I went through today, you need to understand, measure, baseline, set a target, have a plan. Often, it's a new area, so there's no sort of fault in not having grappled with it. But now I think is the time to be understanding your position and to be planning for the future. These things don't happen overnight. Like it's few farms that we step onto that are carbon neutral, and that's a bit of a shock to the industry, I think. Most need a plan to get there, and often that's a decade-long plan. So now the big move at the moment, the work that we're doing is baselining and emission reduction planning, and then into adoption. So in the process of doing that is what is your plan? What do you want to reduce by? So that's I think where the season's at the moment. And just to chime in on the discussion around, you mentioned carbon credits, do you keep them or sell them? There's an opportunity and a risk lens, but I think the key thing to take home is you can't completely have your cake and eat it too. If you go down the line of any sort of certified low carbon or carbon neutral system, you can't claim a carbon credit or claim the benefit of, let's say, regeneration against your own carbon account and sell it so it's on someone else's carbon account. The trade loses the right to claim the carbon credit. So is a fork in the road, and people need to understand that. So you are making a decision if you sell that it is permanently off your business carbon account, and you if you have a future, you desire to go into a low carbon or carbon neutral supply chain, it can't be used again. If you have a separate credit, generate more credits, that's fine, but you can't use the same credit twice. That's the simple message. So there's an opportunity lens through that about joining these new supply chains that are emerging. And then I'd say it's more like 5 years plus out that you could be considering also a risk profile around that, about whether there's actually, like Julia mentioned, certain risks that might emerge. People ask all the time, are you going to get paid for this? Like, we're not going to do it if we're not getting paid. I understand that theory. I'm a farmer too, and you don't want to invest and not get a return. The thing is, we're getting paid a lot for beef at the moment. If we can maintain the returns that we're getting, which are some of the highest, highest in the world, highest in food products, I think I'd be pretty happy, and I think we should be pretty happy. That may come with new expectations and growing expectations. In fact, I think it does. So we're not a commodity producer, we're a luxury beef producer, I think, on the world market. We're selling products that are $50+ a kilo. And there's growing expectations around what that means. And I think environment and high standards is part of that. So I think that's, the future, and I don't think it's a bad future. I think it's a great one if we can maintain excellent returns from our product, and carbon's one part of that. Environmental management in general is one part of it, and obviously organics have been thinking about it for a long time and leading that. So I think this is a new horizon.
Yeah, some excellent points there. And there's so many resources available also on the MLA website, Julia. We're running out of time now, but where's the best place for them to look if they want to have a look at some of the other MLA programs?
Sure. So for the feed, there'll be no feedlotters in this group. I'll skip on that. The CN30 product catalogue is a really condensed overview of products and strategies that are available more or less today. Only a few emerging ones in there. So that's a good place to start. We've really emphasised the need to baseline and look at your data. So there are some online training tools for farmers to complete a baseline independently, but there are also some fantastic allies in the space like Integrity Ag, Steve's company, who can perform that kind of work. So get that understanding of where your opportunities lie. And then if you want to do something even simpler in 5 minutes, like I just did with this little screenshot, is you can jump on the CSIRO Look-See website, fill out some very, very, very simple questions. It took me 5 minutes for my imaginary farm about, your historical treatment of your farm, and it will give you those strategies that are right for your region, because it's very regional and business dependent. Where you could have potential to increase carbon or avoid emissions. So that's probably a great quick step you could do right after this call, is jump on Look-See and have a look what strategies are right for your region.
Yeah, thank you so much for that. So we've run out of time. Just reminding, the webinar is going to be recorded and sent out to everybody. Please contact the relevant parties and us here at Australian Organic if you have any further questions after the session. This is just, the one part of the webinar. At our conference coming up in July, we will also have a climate change session with Margaret Jewell, the CN30 manager, Mark Howden, and Annika Molesworth, also looking at climate change and organic agriculture from a different perspective. But on behalf of AOL, I'd just like to thank you for joining us here today. We hope that you found the session informative, and we look forward to seeing you at another webinar soon. So keep your eye on the email for a link to today's session, and I'd just like to thank our panellists again, and especially Stephen for presenting, for contributing to this webinar today. Thank you. And without further ado, I'll just end the webinar, and I hope you all have an excellent day. Thank you.
Thank you. Bye.
Bye.